the complete guide to getting a quick loan for small business and how they can help you with your short-term needs. Call 888-653-0124 today or click the link in the description to learn more. Minimum 3 months in business and $5,000 divided by Moen Sales. If you've ever needed a quick loan for small business, then you know how hard it can be to get one. It's not always easy to find a lender who will give you a short-term loan without having to pay high interest rates, but there are ways around this problem. There are several different types of loans that you can use to fund your small business, and if you want to get a quick loan for small businesses, you should check out these options. I will walk you through each type of loan and explain exactly what they are and how they can help you. So let's begin. Quick short-term business loans. Business owners often have trouble getting the money they need when they need it most. That's why so many people turn to their friends or family members to finance their projects. But while borrowing from loved ones may seem like a great idea at first, it usually ends up being very difficult due to the ongoing needs of the business. Quick business loans are designed specifically with entrepreneurs in mind. These loans allow you to borrow as much cash as you need within 24 hours. This means that you don't have to wait weeks before receiving funds. Instead, you can receive all of your funding right away. This makes it possible for you to take advantage of opportunities that come along unexpectedly. Business financing options include 1 merchant cash advance, access to cash for cash flow gaps between accounts receivable collections and payments on account payable obligations. The amount borrowed is repaid over time by making regular monthly repayments. 2-term line of credit, a line of credit where the borrower has access to a revolving line of credit based upon their ability to make timely repayment of principal plus interest. TLOCs are typically used for working capital purposes such as inventory purchases, equipment leases, payroll, etc. 3 commercial paper financing, an unsecured debt instrument issued by a corporation, which represents a claim against assets owned by the issuer. Typically, commercial paper is sold under terms requiring payment within a specified period. If the obligation cannot be paid back according to its stated maturity date, the note holder becomes entitled to exercise certain rights, e.g., calling in the total face value of the note. For commercial real estate financing, many companies choose to invest in commercial property because it offers them excellent returns over time. When you purchase commercial real estate, you become part owner of the building. As such, you gain equity in the property, which increases its value. Over time, you can sell off portions of the property to recoup your investment costs. 5 factoring accounts receivable. Factoring accounts receivable involves selling invoices to third-party investors. Once the invoice has been sold, the investor takes possession of the payment. Business lenders will typically lend 80% of the face value of the invoice. You must be able to prove that you own the customer's debt. 6 private equity funding. Private equity firms buy shares of stock in privately held companies. Then, they work with management teams to improve operations and increase profits. After improving, private equity firms either sell the company back to shareholders or liquidate the assets themselves. Quick business loans. Bad credit. Business loan programs vary widely depending on what kind of business you run. Business goals also play a role in determining how much money you should seek. Here are just a few examples of different types of business loans. Working capital loans. These short-term loans help fund inventory, equipment, payroll, advertising, marketing campaigns, etc. Term loans. These long-term loans are used to pay for fixed assets, working capital needs, and so forth. Equipment leasing programs. Companies often lease new equipment rather than buying it outright. In exchange for leasing the equipment, the company agrees to make regular payments to the lessor. Business credit cards. These cards allow merchants to borrow against their future sales revenue. This helps finance large purchases for business purposes like computers, furniture, machinery, vehicles, office supplies, etc. Bad credit. Business loans are designed specifically for people who have had problems getting approved for conventional financing before. There are many reasons why someone may find it challenging to get a personal loan. It could be due to poor financial history, low income, lack of collateral, bankruptcy, foreclosure, late payments, missed payments, bad credit score, no employment verification, limited credit history, etc. If you think you would benefit from having quick funding for your business, contact us today. Quick funding for small business. Small business loan options for women-owned businesses include SBI 7, 504, and microloans. Women who have owned their businesses may find these resources helpful when considering financing options. SBI 7 loans. The U.S., Small Business Administration makes low-interest loans available to qualified female entrepreneurs through its Section 7 program. To apply for a loan under this section, applicants must meet specific requirements related to ownership and control of the firm. Applicants must also demonstrate financial responsibility by submitting proof of collateral. 504 loans. Another option for qualifying borrowers is the federal government's 5/8 program. Under this program, eligible borrowers receive up to 75% of the cost of purchasing land, buildings, fixtures, and other permanent improvements. Eligible projects range from single-family homes to multi-family housing developments. Borrowers must complete a 5-year repayment plan. Microloan options. Finally, there are micro-lending organizations that provide funding to individuals seeking startup funds. Some of these groups specialize exclusively in offering microcredit services, while others focus on microfinance lending and traditional credit products. The online application process. Application requirements differ based upon which type of loan you choose. However, most lenders require at least 3 months' worth of bank statements showing your current balance sheet. You will likely be asked to submit copies of recent tax returns along with personal references. Lenders typically want to see some documentation demonstrating your ability to repay the loan. Most banks ask for 2 years of profit and loss statements, cash flow projections, and sometimes even income tax records. Your business credit score can affect whether or not you qualify for a particular loan amount. Eligible business owners should check their scores before applying for a loan. If they fall below 620, they might consider refinancing their existing debt into a lower interest rate product. A higher score indicates better borrowing potential. Application fees vary depending on the lender. Typically, application costs run between $100 and $200. This fee covers processing time and administrative expenses associated with reviewing applications. In addition, lenders charge additional fees if you do not make all required monthly payments. These charges usually add another 3% per month to your total payment obligation. Application assistance programs exist to help those without access to banking institutions. Many community development corporations operate such programs. Other nonprofit agencies like SCORE and local chambers of commerce often assist new business owners with finding sources of capital. Small business loan terms and conditions. Most short-term loans come with variable rates. Rates change daily, so it pays to shop around. It is essential to understand how much money you could borrow over what period. Repayment terms with alternative lenders may include fixed or adjustable rates. Fixed-rate loans tend to have more extended periods than adjustable-rate loans. Adjustable-rate loans allow borrowers to lock in a specific interest rate for a set number of days. After that point, the rate adjusts according to market conditions. Competitive rates mean different things to different people. When comparing loan terms, keep in mind interest rate. How high does the IPR go? Term length. What length of time am I locked into paying back my loan? Annual fee. Is there one annual fee or multiple ones? Prepayment penalties. Do I have to pay extra when making early payments? A 30-day rate lock guarantee protects consumers against unexpected increases in interest rates during the first 30 days after purchase. After the initial 30-day period, many companies allow customers to renew their contracts without penalty. Others impose fines for early termination. Some types of loans have fixed terms. Fixed-rate loans generally carry more extended payback periods than adjustable-rate loans, but may result in less expensive financing options. Annual percentage rates also tend to fluctuate more frequently with fixed-rate loans. Additional choices for choosing your best options for your business. The best way to find out which option works best for you depends on several factors. First, determine how long you plan to use the funds. Second, decide how flexible you prefer to be with repayment schedules. Third, take note of other financial obligations you must meet each month. Finally, compare the cost of these various products. Getting positive loan decisions from alternative business lenders. Getting a quick decision in hours rather than weeks will save you both time and stress. The sooner you make positive decisions, the faster you can start building your business. When looking at a list of offers, ask yourself questions like, how quickly did this lender respond to me? Did they seem interested in helping me? Was she friendly and professional? Were her answers clear and concise? What was his attitude toward me as a person? Would I feel comfortable working with him again? The eligibility decision process for B2C and B2B businesses should only last a few minutes. If you don't receive a response within 24 hours, call the lender's office directly. Most alternative lending providers require borrowers to provide documentation proving they own the collateral to secure the loan. You'll want to include copies of title documents, tax returns, time in business, bank statements, etc. Conclusion: cash flow issues affect every aspect of running a business. A cash management system helps ensure that all aspects of your business run smoothly by providing accurate information regarding current assets, liabilities, income, expenses, and accounts receivable balances. This allows you to make informed decisions regarding your finances and budgeting practices. An infusion of cash in the form of a quick loan for a small business can help keep your business afloat until it receives its next paycheck. However, before taking advantage of such a service, consider whether you need additional funding right now. It might not be necessary if you already have enough money coming in to cover your bills. Also, do some research to see what fees and costs come along with using a short-term loan provider. Some services charge upfront application fees, monthly maintenance fees, late payment charges, and even higher interest rates. Call 888-653-0124 today or click the link in the description to learn more. Minimum 3 months in business and $5,000 divided by Moen Sales.